Hello, I'm Jay Leibowitz. I'm the DeSanto Visiting Chair in Applied Business and Finance. And as part of our financial literacy education curriculum, we're thrilled to have John Jacobs, who's the Executive Vice President for Global Information Services at NASDAQ, discuss his views on investing and what's important for our college students to know.
I think the first thing I would recommend for college students is to understand the difference between investing, savings, and trading. So savings is obviously very simple. You put your money in the bank and save money, and you get your return is interest, which isn't very much in today's environment right now. Investing is the more interesting point because I think a lot of people can confuse investing with trading. Oh, I'm going to go invest in this stock, it's going to go up and I'm going to sell it and make a profit. That's trading. That's where you're looking for a short-term gain. It's more speculative. What I think that college students should look at is starting to discipline today, because time is on your side, the younger you are, of setting aside a portion, any portion they can, to invest. And invest in the market, which means you're putting money away with no intent to use it in the near term. So you're looking for where you investment choices do you look at down the road. So if you think the American economy is going to do great, then you want to invest in a broad index fund representing the U.S. economy. Or you want to invest in China, find a China index fund or something along those lines. But understand the difference between investing, which is setting money aside in a disciplined fashion for the long term, versus short-term speculation and trading.
Very good, and I know you've had many years of experience at NASDAQ with the OMX group, and could you tell us just a little bit of background on the organization?
Sure.
Because I don't think many of our students will know about everything that NASDAQ encompasses.
Sure, it's a great question because they hear the word NASDAQ and you think, oh, the NASDAQ stock market, which is in New York, which lists Apple stock and trades Apple stock. And actually today, that's a very small part of what we do. It's an important part, but a small part. NASDAQ OMX, which is our big company now, we actually own NASDAQ and we own 29 other stock markets and security markets around the world. So we own derivatives markets and options markets and stock markets in Europe and so on. So one business that we have is owning and operating transactions platforms around the world. That's our global transactions business. We have another business that's interested in global listing. So we have a team dedicated to getting companies to list on our markets wherever they are, US or Stockholm or Armenia. We have a team that's focused on market technology. That team is, we have a business where we power stock markets. So there's 75 or 80 markets in the world that run on our technology. So NASDAQ invented the electronic market in 1971, and now all markets are electronic. We're the largest vendor of stock market technology on the planet. Another area that we are very big in and growing in is we're providing a variety of corporate solutions to companies. So here's where a company might use us to do their earnings call, or a company might use our board tools for board presentations and board meetings, etc. So we have a whole suite of products we're offering to corporates and other organizations. And then last, and my favorite business unit, is the Global Information Services Group, which is the group I run. And that is where we sell stock market and other data and indexes and index products, and we do that around the world. So anyone who is looking at the trading of U.S. equities or prices of stocks in Stockholm or treasury data from our ESP platform, anywhere around the world is using our data or one of our 41,000 indexes. So NASDAQ OMX is a very diversified company now with 4,000 employees. We do business on all 6 continents and touch investors on every part of the planet. So and we have a very large, diverse customer group as well.
Wonderful, and I know you talked about a growing interest in predictive modeling and analytics.
This is the era of big data, lots of massive amounts of data. And the stock market is nothing more, or the options markets or the futures markets are nothing more than lots and lots of data, and it's down to the microsecond and millions upon millions of transactions. So what the trend is to really be able to dive in and do very detailed analytics and model and build algorithms to take advantage of that, to find out what's going to, and can you predict the next trade from the last trade, or can you predict the next 5 trades from the last 100 trades, etc. So as the models become more complete and comprehensive. We gather more and more data sets. You need the tools, you need the analytical minds, you need the people to be able to sit back and have those modeling skills, have those analytical skills to be able to sit there and build those models. And those models are ever increasing in sophistication and need. It's a growing part of the field, and I think that your programs here are perfectly timed.
Wonderful. There's been a lot of interest about Bitcoins. Can you describe what those are, and where do you see that developing?
Yeah, Bitcoins is a fascinating topic. Bitcoin's an example of cryptocurrency or digital currency, which is currency that is based on something other than the full faith and credit in a government or some other commodity standard. There's many of them out there. There's actually dozens of them. I think Bitcoin is the most well known. And they actually, as opposed to thinking about it as a currency, think about them as a payment mechanism. Think about it as a way to transfer payment from one party to another without having to pay the costs typically that maybe a credit card company would charge or a bank would charge, et cetera. So I think you're going to see, I don't know if Bitcoin is the answer, it's certainly the most well-known, is certainly helping define a brand new area, a brand new arena. And I know that around the planet, people are looking at this issue and trying to struggle. And we know people are looking to build the entire infrastructure, whether it's markets to trade them or different companies trying to accept them in their payment systems, et cetera, and how individuals can use them and how they can store them. I think we certainly haven't heard the last about Bitcoin. And I think it's a very timely topic to pay attention to in the future.
Very interesting. The last question before any general comments you might have, if a student was interested, so one of our college students was interested in investing in the stock market.
Mm-hmm. So absolutely. I think the first thing is, do you really want to know what you're buying? Okay, and you really understand the motive of the person selling it. So if you're looking at, and I think the easiest thing to do when you start off investing is pick some indexes because they're easy to do. It's a basket of stocks. You have less risk than a single stock or a single bond or any other single commodity, single instrument. There's inherent risk with one. You put all your eggs in one basket. If you're successful, great. If you're not, it's a problem. But if you buy a basket, if you buy an index like the S&P 500 or you buy an index of bonds or something along those lines, if you do that, then what you're doing is you're getting the exposure you want, you're getting the investment idea you want, but you're getting less risk. And the whole thing is about a risk and return profile. And so I think that's very important. I do believe in research, and when I say only invest in what you know and understand, if you cannot understand it, then it's not the investment for you. And if you can't explain it, and someone can't explain it to you very rationally and clearly, it's not the investment for you. So, it may be in 5 years or 10 years or 15 years, but understand, as the amount of time you have to devote to this, you want to start off with the more basic investments. And you didn't start taking calculus in first grade. You started building math skills in the first grade that leads you to calculus, whenever you take calculus. It's not something you jump in and start buying leverage and inverse ETFs, triple up and triple down on the market moves and with a rolling futures underlying product. That's not what you want to start with. You want to start simple, learn it, understand it, believe in it, and then over time you can evolve.
Great. And any closing comments as we try to inject financial literacy education into our curriculum? Anything important other than what you discussed that you feel we should be sure to include?
I think it's all about research, understanding, and knowledge. I think it's about risk and return. I think is not well laid out for people. That for a higher return, you're typically taking more risk. And you should only be risking in investments, especially early on, what you can afford to not have. This is not a way to pay tuition the next semester. This is a way to invest in your future down the road. I think that what you find is, and I think it's a self-fulfilling. I think the more work you do, the more research you do, the more you learn about it, the more you will learn, the easier it becomes. I think the biggest thing I would recommend is everyone just start. Just start simple, start small, but start, because I think time is your friend. Mistakes made now, easily correctable over time. Mistakes made when you're 55, less correctable. I would start now, and there's a ton of resources available. The web has provided an unlimited number of resources for people to look at to start looking at this space.
Wonderful. Thanks so much, John.
My pleasure.
Yes, great.